Two events signal that investors, who traded other tokens for Spring before the Spring token halving, can now trade tokens for more tokens. 1. Spring has become the most expensive of the 4 tokens. And 2. Summer has overtaken Spring to become the most plentiful token. These events signal that the season of cheap Spring tokens has ended, and a new season has begun in which summer tokens are the cheapest and most abundant of the 4. Investors who anticipated the changing of the seasons by trading other tokens for Spring while it was cheap can now take profits. During the first 9 months of the project, between September 2021 and June 2022, the prices of the tokens remained close to this ratio: 5, 6, 7, 8. This means that if Spring's price is 5 arbitrary units per Spring, then Summer's price will be 6 units per Summer, and so on. Notice that the dollar prices of the tokens are not possible to predict. But the relative prices of the tokens depend on the relative abundance created by the mining supply schedule, hard-coded in the smart contracts. Check out this video for a detailed explanation of how mining supply causes price differences. In particular, if we have 5 summer tokens, the total value measured in these arbitrary units will be the number of summer we have, times the price of summer, which is 6 units per summer, equals 30 units. And 6 spring tokens will be worth the number of springs we have, times Spring's price. And that is equal to 30 units as well. Therefore, if we have 5 summer tokens, we can exchange them for 6 spring tokens. Similarly, if we have 5 winter tokens, we can exchange them for 8 spring tokens. And so on. On the 5th of June, the Spring token mining supply was cut in half. The new scarcity of Spring tokens put upward pressure on Spring's price. 5 months later, the price of Spring has risen as the market adjusted to the lower supply. The ratio of the 4 prices has changed, matching the new rates of production. Prices drifted towards 10, 6, 7, and 8. In this new situation, 6 Spring tokens are as valuable as 10 summer tokens. We can illustrate the situation like this. Before the Spring halving, the prices are 5, 6, 7, and 8. And after the halving, the price of Spring has doubled relative to the other 3 tokens. There are 3 classes of investors who can take profits now that the prices have reached their target ratio. Summer investors. Before June, 5 summer tokens were worth 6 spring tokens. And after the halving, 6 spring tokens are worth 10 summer tokens. An investor with 5 summer tokens who anticipated the change of seasons would have traded them for 6 spring tokens before June, and would trade those 6 spring tokens for 10 summer tokens today. Autumn investors. Before June, 5 autumn tokens were worth 7 spring tokens. And after the halving, 7 spring tokens are worth 10 autumn tokens. An investor with 5 autumn tokens who anticipated the change of seasons would have traded them for 7 spring tokens before June, and would trade those 7 spring tokens for 10 autumn tokens today. Winter investors. Before June, 5 winter tokens were worth 8 spring tokens. With the new prices, 8 spring tokens are worth 10 winter tokens. An investor with 5 winter tokens who anticipated the change of seasons would have traded them for 8 spring tokens before June, and would trade those 8 spring tokens for 10 winter tokens today. The tokens have seasons that last for 9 months. Each season, one of the tokens becomes cheap and abundant compared to the others because it's produced at the fastest rate. In the next season, That token is produced at the slowest rate, and it becomes scarcer and more expensive over time. The era of relative abundance is followed by an era of relative scarcity. Summer will be produced at the fastest rate, and will tend to be the cheapest token, until the 6th of March, 2023, when the summer halving will take place. The ratio of the prices will then start trending toward 10, 12, 7, and 8. As summer becomes more scarce and expensive in comparison to the other tokens, the season of abundant summer will end, and autumn tokens will become the cheapest and the most abundant. Investors in seasonal tokens profit from the changing seasons by trading the more expensive tokens for the cheaper ones, increasing the total number of tokens they own with each trade. With each change of season, the cheapest token becomes the most expensive, allowing the investors to trade again. The current profit-taking period will last until March 2023, when the price of summer will start to rise in comparison to the other tokens. The change of season will be complete when the prices reach the ratio 10, 12, 7, and 8. And the next period of profit-taking will begin. Now, this is happening during one of the worst Bitcoin bear markets. From the 5th of June to November 2022, there is a price drop of 50% in Bitcoin and Ethereum, causing a price drop in seasonal tokens as well. But investors, who anticipated the rise in price of the spring token after the halving, had the opportunity to double the number of tokens they own by trading their tokens for spring tokens. This illustrates vividly the utility of the seasonal token system. Where is this money coming from? Check out this video to find out more about the unique collaboration among miners and investors in seasonal tokens.
To learn more about seasonal tokens, please subscribe to our channel. Click on the bell icon to get new video updates.